In today's video, I'm going to do a walkthrough of the two trades I had taken today off the open on Meta. So I took one loss and then one winning trade. And the reason why I want to talk about this is not so much to dig into technicals and talk about why I was in the trade. That's not the whole goal of today's video. The goal of today's video is to talk about how you deal with losses and how you progress as a trader after taking losses. So very brief introduction. If I've taken a loss in my day, I have a very sort of conservative mindset. If I take a loss as a human, right, as obviously we're all humans, I would hope, and you've taken a loss, the first thing you're going to do is you're going to be very emotional about the trade. Everyone's going to be emotional. No matter if you're a professional trader, trading for 15 years, a veteran, or someone who's been trading for 1 month, you're going to be upset about the trade. Nobody's happy to take red trades. But the difference between a profitable trader and a veteran trader compared to a novice trader who's still developing is how you deal with these emotions after taking a red trade. So for myself, what I like to do is I like to take a quick breather. After taking a red trade, I want to walk away from the market, right? Maybe I'll go and make myself tea or walk my dog or just step away for 4 or 5 minutes just to collect myself mentally. Then I'm going to go into the next trade. And what I'm going to do as I go into the next trade is do two things and two things only. The first thing I'm going to do is I'm going to adjust my size very carefully. If I've taken a very, very big red trade, I'm going to take my next trade probably being half size. So if I had a 10K position on trade one, I'll be in a 5K position on trade two. Now, if it's a smaller loss off the open, I can be probably my same size or a little bit more than that. That's okay. But large losses need to be preceded by smaller positions going forward because you want to get your confidence back. And the only way to get your confidence back is by taking another winning trade. The second thing I'm going to do is I'm only going to follow my trade plan. I'm not going to take trades that are willy-nilly coming up in the radar. Maybe Coinbase is breaking out or Nvidia is breaking below key tactical level. If it's not my trade plan, I'm not going to take it. Trade plan is probably the most important concept any trader can have. If you are a novice trader or a developing trader who's been trading for 15 years, no matter who you are in your career, you have to have a well-defined trading plan. Otherwise, you're going to be thinking emotionally. You're going to take a losing trade. You're going to come into your next trade, trading something you probably never planned to trade. And the next thing you know, you're deeper in the hole because you're going all over the place and not honing in on what your original intention was. So again, to repeat myself, two things: adjust your risk management and trade your plan. That's it. That's the goal of today's video. We're going to talk about trading psychology. This is not a video that's just talking about how you manage your emotions intraday. I mean, obviously it's about that, but it's also going to be how you move on as a trader who maybe is seeing break even for 6 months and doesn't have a lot of confidence in the market yet. Well, even if that's the case, right, you should use this video as your sort of like your guidebook to progress going forward. And the ultimate goal of today's video is really going to be centered upon following your pre-market plan, right? Or if it's not pre-market, following your original intention, your original trading plan, and then adjusting and tailoring your risk management according to the trades you plan to take to begin with. So that is the goal of today's video. Let's get right into it. Okay, so this is my game plan for July 10th. And what I always will do is I will create a sort of note, right? A mental note of what I'm thinking in the morning. So no matter what day it is, if I'm trading that day, I'm going to create a sort of mental note of what's going on in the market. So the first thing I'm going to do is I'm going to note if we have any major events in the day, if there's an econ event that I should know about, maybe this FOMC or CPI later in the week, I'm going to write about it, right? I'm going to write about it just so I know in the back of my head that that's going to impact the market. The second thing I'm going to do is I'm going to go over to SPY. SPY being the market, I'm going to look over and see, okay, what's happening on SPY, which could impact the market. Are we nearing a big supply zone? Are we nearing a big demand zone? Are we gapping up or gapping down? What's the overall sentiment on the market at that particular session, right? This is what I always do no matter what. Today, I had no sentiment because the market was in a tight range between 440 and a big demand at 437. So if I go over to SPY very quickly, you can see SPY was just sitting right between a very big level at 440, which is a major supply zone, and a very big demand at 437. So I knew that it was really difficult for me to create a sentiment until we broke above 440 or below 437. Now, if we broke above, obviously it's very bullish. Break below, very bearish. Right below 437, very bearish. And that was my game plan off the open on SPY. Now, the second thing I was looking at was that if we aggressively sold, I like a bounce. Not important. I talked about what I was watching on SPY, but the name I want to go over is Meta. All right, Meta was my sort of pre-market plan because of one thing in particular. There was a catalyst on Meta. Meta had a very strong catalyst over the weekend. I think it hit, I can't remember, millions of users, right? Whatever it was, millions of users. I think it was 100 million users. I could be terribly wrong on that number. But the idea was that very positive catalyst. It was gapping up in the pre-market. It was one of the strongest names in the pre-market. So I liked it for continuation or a pullback to for a potential bounce. So I was watching for above 295 for calls, and we have room in 300, or I was watching for a pullback to 291 to 290 as a major demand zone, and I'll look for a dip buy opportunity. So again, you see here, right? I'm watching one ticker, Meta, but I have two different trade plans on this. So they're going to be executed completely differently. Let's go over to my TradeZella now. I want to show you how I executed both of these trades. So you see that I ended the day about 400 bucks in green. That was not a big day for me, right? My win rate was 50%. Took two trades. Let's go over the losing trade. Let's talk about that one first. So on the losing trade, right? On the losing trade, let me make my face a little smaller so we can see the screen a bit better here. On the losing trade, I had entered around 9:44 a.m. It's about 14 minutes after market open. I had sold for around maybe 8 minutes later for an approximate 17-18% loss. So what you're going to see here is me entering at 1.66 around 9:44. So what was I seeing here? Well, Meta off the gate did exactly what I wanted it to do, right? Meta popped right above that 295 resistance, right? Closed above it, which is exactly what I wanted to do. Then all I was going to do was look for a dip buy opportunity in the zone between 294.50 to 295. That was my game plan, right? That was my pre-market game plan. So all I did was I executed that game plan. Now, what I did incorrectly here was I did not read price action properly, right? If you were to look here, what happened on Meta was I came in when there was an extremely high volume sell candle coming in at this 295 support. What I should have done after seeing this was wait for a little bit lower, for a better opportunity for a dip buy. Unfortunately, I didn't do that. So all I did was execute my game plan. I got in calls around 294.70 and change. You can see around 9:44 a.m. was when I got filled. So I got in where I thought was a good entry, which is pre-market highs around 295 or 294.50 and change. So I got in calls over here, expecting us to push back up to the previous high of day. So I ended up getting in calls. And then you'll see about 8 minutes later, I got stopped out. So if you go back to my TradeZella, you see here, I got stopped out around 9:52. So if I go to the 2-minute time frame here for a second, just so I can get a better visual representation of where I got stopped out, 9:52 was really around this candle, right? This candle was where I got stopped out. So clean push, 9:52, I got stopped out. It broke below my key levels. I was down about 17%. In fact, I should have probably cut this a little bit earlier. As soon as you broke below pre-market low, pre-market high, I should have cut. Ended up not being a good trade. Was completely mentally fatigued after this trade because it just blew through every single technical level I had. And I was like, okay, not good. So I stopped out of the trade, almost 20% loss, and I took a step back. And this is what I want to talk about. I want to talk about the idea behind taking a step back as a trader, right? You're going to make mistakes, right? You have a beautiful pre-market plan, and sure, sometimes it's going to work, right? 90% of the time, whatever it may be, whatever your sort of your win rate is, it's likely going to win more oftentimes than it loses if you have a good strategy or a good edge. But the idea is that if you do take losses, how do you progress? Right? What do you do going forward? And for me, I sat for a second and I realized, you know what? I need to walk away. So I walked away. I made myself some tea. I sort of went about my day for about 5 minutes to give myself a little bit of a breather. Because at the end of the day, we're going to get emotional. We're going to get in this sort of, especially taking losses, you're going to get to that point where you don't really want to sit at that screen and then look for other crazier trades. Next thing you know, now you've taken 2 or 3 or 4 or 5 red trades in a row. So what I do when I take losses is I typically will just walk away, right? I will walk away, or I will plan to not trade for the next 5 minutes. I'll just sit away for the next 5 minutes and just watch the market and get a grip to see what's happening. So that is exactly what I did here. I waited for about 5 minutes, I did my thing, and I came back 5 minutes later. And when I came back to the market, I saw that Meta was doing something very interesting. My other game plan, right, in my notebook was to watch for a dip buy opportunity between this demand zone around 290 to 291. Despite the fact that I had just taken a loss on Meta, right, there was another opportunity here setting up itself. In this demand zone, there was another opportunity. And this was a much better risk reward because I knew that we were basing for a while. We were basing between 9:44 to around 10 o'clock. And I also saw the fact that we were creating beautiful wicks off of this key demand zone. So all I'm doing is risking $1, right? $1 for a much larger win, right? So if I were to create a long position here, I intended to open a position around 291 and change with a stop below 290 and I would take profit into around this 295 supply. So I was risking about $1 for almost a $4 reward, right? And this is a very good risk reward. So despite the fact that I just taken a loss on Meta, I came back in clear headed, no thought of revenge trading, with the pure minds that this is an entirely different trade plan that fits within my pre-market notes, and I executed the trade. So you're gonna see here, I got in on the next trade, right? I got in the next trade at approximately 950. So if I were to go back here, you'll see I got in the next trade at approximately 950. Or sorry, 1050. Or no, let me see. What was the exact time I got in on Meta? It was around, right? It was around this 1002, right? It's around 1002. So if I were to go in here, you'll see that on the 5-minute time frame of Meta, we were right over here. We came right into 290 and created very beautiful wicks off of our demand zone. We slowed down into it. We started basing. So all I did was open a long position at 1002, which is this candle right over here, right? The bottom is over here, and maintained a stop below that 290. So I got in my calls. We saw a very beautiful push right into my supply zone. And as we're pushing up into that supply zone, all I am doing is making sells. Selling 15, selling 10, and then finally selling 5 for break even once we pull back a little bit. You can see here in total on this trade, I made about $700. So you can see here that the idea behind trading is that it's just a probability game, right? You're gonna take losses, you're gonna take winning trades. How do you manage your winning trades versus how do you manage your losing trades, and how do you manage emotions in between these trades is going to be pivotal towards your profitability, right? If you come in with the mindset that you take one red trade and you start going on tilt and you take 10 other trades on that same ticker or maybe on a different ticker and there's no thesis behind the trades, then you're going to be in the hole very, very quickly. How I recommend people sort of progress from a losing trade or even just a losing week or a losing month or a losing year is you follow a real trade plan, right? Doesn't matter if it's something that just hit your radar and, oh yeah, I want to buy calls on Coinbase because it's breaking out of this key level. If it's not within your trade plan, 9 times out of 10, don't trade it. Stick to your trade plan. This is the only way to progress as a trader. And if you notice that your trade plan is just not working out, then you have to go back and assess what are you doing wrong in your trade plan in the pre-market and try to make it better. Try to increase your edge by maybe adjusting how you create your zones or maybe adjusting how you trade your strategy, right? The ultimate goal as a trader is to take more wins than losing trades while maintaining a good risk reward. And that's the ultimate goal. You're gonna take losing trades, you're gonna take winning trades. How you progress that next trade for some people means walking away and making yourself some tea, right? For other people, it may mean going to go walk your dog or, I don't know, giving your significant other a phone call and just talking to them for 5 minutes, right? The goal is you want to get away from the screen for a little bit, collect yourself, then come back into the market, execute your plan, don't go willy-nilly. And that is how, for me, I have progressed as a trader. It's a very small thing that not many people would think is important, but for me, stepping away from the market is what allows me to collect myself and come into the market as close to as emotionless as possible to then take and proceed and take more trades on the day. I hope this was helpful. You can see that today was not a big day for me, but I ended up recovering very nicely. And I recommend that if you guys are in similar places in your trading career, that you want to just sometimes take a step back, analyze the trades you've taken, analyze what you're doing in the market, and see if you can increase your edge. See if you can refine your risk management. See if you can refine your emotions to make yourself an even better trader. So hopefully this was helpful, guys. Please leave any comments if you got any questions. Yeah, happy trading, safe trading, and I'll see you guys all soon. Bye, guys.